I just have a quick introduction out here. Good morning, everyone, and a very warm welcome to all of you. Thank you for joining today's expert webinar on NFRA inspections decoded for audit firms. So, the session is being hosted by Firmway, and Firmway is a fintech company that is co-founded by chartered accountants and incorporated in 2016. We specialize in audit confirmations, balance confirmations, and reconciliations for audit firms and corporate finance teams. Firmway is also recognized by the Institute of Chartered Accountants of India under the Beneficiary Schemes Directorate for providing audit confirmation software in line with SA 505 external confirmations to across CA firms in India. Today, more than 500 plus CA firms across India are using Firmway to streamline their audit confirmation process in according with SA 505, peer review requirements, and evolving regulatory expectations. In addition to this, over 500 plus corporates also use Firmway to automate their accounts receivables, account payables, confirmation and reconciliation, also MSME and struck-off compliances. To formally welcome you all and to set the context for today's discussion, it gives me great pleasure to invite our CEO and co-founder, Mr. Prashant Gupta. Over to you, Prashant.
Thanks, Ryan, and I really welcome everyone. So quickly, in terms of to get started with, good morning, everyone, and I can see participants joining us from different parts of the country. So a very warm welcome to all of you, and thank you for being with us this morning. We have an excellent turnout today, which reflects like how important the topic of NFRA inspections has become for the profession. At Firmway, we regularly interact with audit firms of different sizes, like from sole proprietors to some of the country's largest firms. And one thing which is very clear, if you see, is audit quality expectations are evolving rapidly. Like we have seen the kind of expectations has increased drastically over the period of last couple of years. And if you see the recent NFRA inspection reports, which were released in March 2026 for almost 8 to 10 firms, we saw that it has reinforced that regulators are no longer evaluating only the final audit opinion. They are actually examining the entire audit process from like documentation to say external confirmations to professional judgments, right? Quality management systems, and specifically also the use of technology. So these reports are really a valuable learning opportunity if you see for the professional. They actually help us, all of us, understand evolving regulatory expectations and how to strengthen our own audit practices, right? I actually liked one thought that actually captures this well. Ultimately, an NFRA inspection should never be the first time an audit file is critically reviewed, right? Audit quality is actually built throughout the engagement, not demonstrated only at the time of inspection. So that is one thought which I actually had heard and actually has captured my interest well. So because generally when we speak to the audit professionals and they are mostly asking us the question is that like the question to the general everyone and regulators, like what exactly does NFRA expect during an inspection? How can our firms be better prepared? What practical steps can we take today to strengthen our audit quality and documentation? So if you see, that is why we have arranged today's session precisely to address these questions. So at Firmway, though we build technologies that supports audit confirmation and financial reconciliation, we also believe that continuous learning and sharing of practical experiences are equally important. This webinar is just a small step in that direction. And with this, it is now my privilege to introduce today's distinguished and esteemed speaker, Paresh Clark. So Paresh sir is actually a fellow member of ICAI and he's the senior partner at Bansi & Mehta. So many of us would already be knowing him because the kind of personality he is, and the kind of presence he has, and the kind of know-how he has in the industry is speaks for itself. But he brings nearly 4 decades of rich experience in audit, assurance, and accounting advisory. Over his distinguished career, if you see, he has led statutory audit of several listed and unlisted companies, undertaken numerous financial due diligence assignments, and advised clients on complex accounting matters. So, beyond professional practice, he has also contributed significantly to the profession through his active association with various ICI committees and professional bodies, helping shape professional education and the development of accounting and auditing standards. Given his vast experience, practical experience, I am confident that today's discussion will provide practical insights that every audit professional can take back to their own practice. So, sir, on behalf of everyone at Firmway, thank you for accepting our invitation and for taking the time to share your knowledge and experience with us. So, everyone, please join me in welcoming CA Paresh Clark, sir. And over to you, sir.
Good morning. Thank you, Prasant and Ryan. Thank you, Prasant, for a nice introduction. So, yes, audit quality, as you have rightly mentioned, has become a no-go scenario. And as you rightly pointed out, it is not when the inspection takes place when you start with the audit quality. It is the audit quality when you start with the audit itself, or before even you engage an audit team or engage with an client. I think your audit quality processes have to be in place. So that is where we are. And now, as you have assigned me the task to take you all through the NFRA's inspection report, and the main particularly focus should be on the recent inspection report. With that, I'll just start my presentation.
Great, sir.
Is my presentation visible?
Not yet. Not yet, sir.
No. Is it visible now? Is there anything else to be done, sharing or something?
So you will have to click on that shared screen if you see below. So there would be a share screen option, and once you share the screen, you will be able to select a window over there, entire screen or maybe a window, and then you can share that particular.
Where is the share screen now? Change layout, enter full screen, share.
Right.
Okay. Yeah, I have to give the one second. I have to give permission to Zoho to share screen also.
Okay.
Yeah.
Yes, sir. It's visible now.
Fine.
Perfect.
So we'll go to slideshow. So now everyone is able to see the screen.
Sir, if you can, I guess slideshow maybe you're able to see your entire screen. So
Okay.
maybe if you can just go full screen, that would be more helpful.
This
Yes,
is
now it's perfect.
yeah, but I don't know, if I do presenter's view, then you should be able to see only the main slide, because I will need the presenter's view, very important for me, because my notes are...
Okay, but understood. So right now, I guess it's not coming that way.
Okay,
Uh,
fine. I'll use my iPad for presenter's view, not an issue. Okay.
sure, perfect.
Okay. So, this is just a broad view of what we are expected to deal with today. So, NFRA's authority, role under the Companies Act, inspection objectives, their criteria, and of course, the key observations. So, now, as you all know, background of NFRA. So, NFRA was established in under the New Companies Act, and Section 132 has all those powers in which NFRA was established, and mainly Section 132 deals with it. It has a statutory authority to monitor and enforce compliance with auditing standards, and it oversees the quality of services of the auditing profession, forms statutory basis for audit quality inspection. So, these, I would not say jargon, but the audit quality would be time and again reflected here in the presentation. And NFRA's main concern is the audit quality throughout the firm and auditing profession per se. Now, subsequently, NFRA rules were also framed, and all powers were given under NFRA rules. Rule 8, which includes review of working papers, communication related to audit, evaluate the audit quality control system, and perform testing of audit, supervisory, quality control procedures as could be considered necessary. In fact, there is an body called International Forum for Independent Audit Regulators, and NFRA is also a member of that international body. And all these are not restricted to only review and communication, but NFRA has mandate for public disclosures of inspection and findings, as well as to protect confidential information when they are publishing their reports. Now, core objective, as we see, evaluate whether the audit engagement are performed in accordance with applicable standards on auditing, ethical requirements, and legal regulatory requirements. We'll see this when we just move a little forward. Then you have assess whether audit firms have designed, implemented, and operated an effective system of quality management in accordance with the standards on quality management. Now, at present, what we have is SQC 1, that is Standard on Quality Control 1, and which is at present applicable, as I just said. But going forward, you have standards on quality management, and Institute has already issued SQM 1 and SQM 2. However, their effective date, which was supposed to be from April 26 for the time being is deferred. But whatever is the case, this SQM1 or SQM2 are going to come and stay. And therefore, we all have to be prepared for SQM1 and SQM2 as well. Another objective is to improve the reliability and credibility of financial reporting. So audit you conduct, one is the competence and second is skepticism. We have been hearing this phrase skepticism time and again. And what it is a certificate. And it is not just an evidence. You have to get convinced on the evidence. You have to corroborate those evidence. Merely having evidence is not sufficient. You should be able to support that evidence. Let us take an example that there are transactions with a related party, and there is management says no, that related party transaction is at arm's length. Now, how do you establish that arm's length? That is also important. I mean, just taking a representation or an assurance from the management is not sufficient. As an auditor, you will have to go through the entire process to verifying or corroborating evidence given for arm's length. Say, in this case, suppose if there is a sale to a party and then the credit terms, let us say there is a distributor. In distributor, credit terms with all the parties is in 30 days. The pricing is same with the related party as well as the others. But credit terms to related parties 120 days. Now, these kind of skepticism you will have to apply. You will have to do all the testing to see that even the arm's length could be established. It is not just a document whereby you get support of arm's length. Another example is that, many times in inventory, you look at cost or NRV, whichever is lower. Now, in case of cost or NRV, whichever is lower, also you have an issue. How do you establish an NRV? Suppose in your stock, your auditee, your client has the stock which is a year old, but still client gives you an assurance that no, this goods is sellable. Now, how do you then get convinced? Only by their statement, only by their representation? No, answer is no. What you need to do is you will have to again corroborate. You will have to see that till the time you finalize the accounts, whether there has been a sale of that particular material or there has not been sale, then is there any likelihood, are there any external evidence to say that the stock which is carried would be sellable? And then only you have to take a call whether that cost is justifiable or NRV is going to be lower, then you will have to give effect to those NRV. So mainly in this skepticism, it is a critical assessment which one ought to be doing, and is just not relying on the management. Another objective is, which is statutorily mandated to NFRA, is adequacy of the governance framework and its functioning. Effectiveness of the auditor's internal control over audit quality. We as auditors are always looking at internal control of the auditee, but we will have to also have our internal control over audit quality in place and effectiveness thereof. The system of assessment, identification, and mitigation of audit risk. This is also NFRA's mandate, so that it is able to safeguard the interests of investors and other stakeholders. Audit quality inspection are the primary mechanism for fulfilling NFRA's statutory obligations, and of course, the protecting public interest. So then, what are the criteria for inspection? When they carry out an inspection, what are the criteria which NFRA is to apply? So NFRA first has to look at the legal framework which it has under the Companies Act, NFRA rules. And NFRA rules also get amended time to time. So that's the legal framework on the basis of which the inspection takes place. What it will look at, standard is applicable to professionals. So as chartered accountant or as auditors, standards on auditing, whether they have been complied with, then SQC1, which we just referred to, and going forward SQMs also. And of course, most important is the code of ethics. These are the standards which as professional we need to adhere to. And as I just mentioned, that even our firm's internal control, so internal guidelines, what sort of guidelines have been issued for audit quality maintenance, what are the methodologies which are using, we as auditors using, whether what kind of manuals we have, and so on and so forth. And then accounting standards, so applicable standards for selected audit engagements under review. So, the inspection would look at whether which accounting standards are applicable and how those have been complied with. And as you know, that during the audit time, you have a lot of estimates and material accounting policies are come across, and those also will have to be looked into. In addition to that, the inspection also looks at circulars and directives, including advisories issued by regulators, say SEBI or RBI, and firms' obligations to comply those with. So inspection scope and approach. Now under inspection scope and approach, how they select. So the focus would be on firm size, significance of audit portfolio to stakeholders, past inspection compliances, or a risk-based approach. In this case, scope determination and changes. So scope will include review of firm-wide quality control policy, including tone at the top, firm culture and governance. As I just mentioned that, how exactly the firm itself is geared up or is presently having a quality control policy. Controls around use of technology. This is most significant in today's world, today's time. I think we as auditors have no scope but to use technology to evaluate the audit firm's adherence to SQC1, Code of Ethics and applicable laws, which we just saw. And then NFRA informs the auditor how exactly the audit process, we will see little later also, inform the auditor of inspection, scope at commencement. Scope generally remains consistent unless specific findings warrant an expansion. So initial stage only they intimate the scope and then moves forward. Any change will be communicated with the due authorization. So there could be some, in addition, there could be some concern of the government. Then those concerns also could be covered while determining the approach. There is an guideline which has also been issued, which is in public domain, and so it is at NFRA's website, which is called NFRA, Audit Quality Inspection Guidelines, which is updated up to 30th April 2026. And the presentation does try to cover what has been mentioned therein. Then selection of auditors and audit engagement, as we say, risk-based, considering firm size, nature, all that will be taken into account. So it could be a random selection as well. It is not only a risk-based, there could be a random selection. And based on financial indicator, there could be some complex areas. Let us say some large infrastructure companies are there, then those could also be covered, or some entities lot into doing only infrastructure companies audit, then those firm also could be subject to inspection. Now, how is the inspection methodology works? Now, inspection methodology includes auditor's presentation. So, once the approach is there, the auditors are asked to give a presentation for their, what we could say is the, as I mentioned, that audit quality scenario in the organization. Then NFRA submits a questionnaire. There are entry-exit meetings. NFRA teams comes. There are walkthroughs, site visits. Based on observation, they also carry out review of audit documentation and discuss meeting with senior management, interviews the members of the leadership team and engagement team, and they select few audits. It is not that all audits are reviewed. Very selected audits are reviewed, sample audit, but the audit processes and procedures within the organizations are reviewed very detailed manner. So this is what the inspection methodology is there. There could be a detailed processes also. Then they issue inspection report, so that NFRA's inspection approach findings, non-compliances, auditors' responses, NFRA's conclusion and recommendation, and root cause analysis. This is also very significant, is the root cause analysis. Report observations are not a determination of misconduct. So that's a comfort we all should take, that it is not a professional misconduct, and it do not constitute a conclusive finding for imposition of sanctions. So this is, we must always take this with a right spirit, that inspection is for taking you forward for improvement in audit quality. And NFRA then publishes non-compliance findings on its website. If you go to NFRA's website, you will get audit quality review report. Then you will get financial reporting quality review report. You get inspection reports. You also have various circulars on their website. And in fact, that is the material which, if we keep on reading, then we know that what NFRA is looking for and what we as firms, auditing firms, to be pursuing. And then, of course, mandatory compliance timelines is there. After they give an inspection report, the response is to be given, and 10 days, 90 days, 180 days timelines are there. So this is what timelines are there. And I mean, there is a recommendation saying that all auditors are encouraged to present the inspection report to audit committees of public interest entities audited by them. That would bring about transparency and governance accountability. Follow-up and recurring inspections. Prior inspection findings invariably form part of next inspection. So NFRA may conduct earlier follow-up where public or investor interest warrants. And so it is not that once inspection is over, it is done. There would also be a follow-up. So this is where we are about the inspection process. Now coming to the executive next slide on executive summary of observation metrics. This is an interesting data which we have. So NFRA quality inspection was carried out between December to January, and they had covered 10 firms, as Prasad mentioned, for the financial year 23-24. The inspection revealed quality deficiency and whatever we say, it has been widespread and systematic. A summary of NFRA observations underline the need for structural reforms in firm level quality management. Am I audible? No, I mean
yes, Paresh,
yeah,
sir, you're audible. We can hear you.
Yeah, and so these are summary of NFRA observations. Auditors' independence and non-assurance service policy gaps. If you see the chart, you have key observation listed on left-hand side, and on bottom the audit firms which have been mentioned. And the first, which is considered as critical, and it is critical. So auditors' independence and non-assurance service policy gaps. I mean, it has been observed in all 10 firms. Then you have audit documentation and deficiency, loans and advances inadequate procedures. So this is a focus area. Then, first two you see is the general observations, which is across the firms. Then you have loans and advances, inadequate procedures. Then related party transactions, audit deficiencies were noticed. Revenue recognition audit deficiencies were noticed. Audit opinion formulation. So at least you could see that only that was not noticed, though it has a high high level as to the quality audit opinion formulation, but it is not that many firms found deficiency in that. That we may take it as a kind of comfort. Impairment assessment lapses, that also is almost 6 firms. Then monitoring and root cause analysis, engagement quality control review, going concern evaluation, human resource and performance evaluation, CARO reporting, so on and so forth. So this summary itself says that what are the areas and how the observations have come about. And we can take a clue from that these are the area we start focusing. And first two are the most important area which we need to focus and improve upon, so that audit quality deficiency is sorted out or is not found going forward. So now what I have tried to do is dealt with some of those observations, and then if there is anything which you need to know, we will deal with. And this will be, of course, whatever the observations NFRA has done, if I narrate it, it is on a no-name basis, though they are in public domain. But in a presentation, I may just give an example or an illustration, but not naming which firm or what firm. Independence declaration are missing or incomplete. This is the first observations. or using immediate family member instead of term relative. So, this independence declaration is a must, and using immediate family member instead of the term relative. So, NAFRA's observation is that it cannot be immediate family member. The relative should be included. And it is a wider definition which one need to cover. So this declaration need to expand. Cover and limited to audited, excluded group entities. So this is one of the observations. So it is this independence declaration cannot be restricted to only auditing. It has to also cover group entities. No tracking of violation, disciplinary framework, or independent verification. There has not been any tracking done. One firm relied solely on partners' income tax return. In one case, what was observed was a qualified CA was employed, and after 2 years, it was detected that he was a fake qualified chartered accountant. Therefore, even the processes of HR, of absorbing qualified assistant, should be strengthened, should be foolproof. And as you know, even in when you employ a qualified assistant, you need to intimate to the institute. And if that process is done within the time frame given, then this kind of issue may not arise. So, so these are the points which even in my other thing is indicated that way. Then auditor's independence remedial action. Design a standardized declaration format covering all group entities and complying with the requirement prescribed under section 141(3). Now, at the beginning of the year or at one point of time during the year, you get this declaration, but you will have to continuously monitor that declaration as well. So there has to be a mechanism in place, a kind of a tracker in place, so that there is a monitoring happening. And what is suggested is assign an independent officer to verify a sample of declaration annually. So you need to have somebody in an organization look at this declaration. I believe, when you cannot hold, say, shares of the companies or whatever the other restrictions are there, you will have to monitor them and even test check. Just taking an income tax return would not be sufficient. And a declaration form should be comprehensive enough to cover all the disqualifications specified under section 141(3). Then we move to the next slide. Policies applied only to Indian entities. See, non-audit services need not be restricted to only Indian entities. It should cover network services also. Now, please understand that NAFRA's emphasis on network services is also quite significant. You can't restrict it to only your entity. You can't restrict it to only group, Indian group entities. You will have to even cover overseas network. So non-audit services discussion with audit clients during closely or after completion of audit period. So that is also deficiency. You are not expected to be doing any discussion also on non-audit services during or even closely after the audit period. So whatever the embargoes are there, a kind of embargo which may come through when the company's amendment bill is passed. So all will have to be adhered to. So non-maintenance of a consolidated or centralized record of non-audit services, affiliate to audit clients of the firm network, all these will have to be covered. Of course, the term affiliate is what NFRA has come up with. As far as Companies Act is concerned, it is Section 144 which we need to deal with. However, now NFRA does refer to affiliate. So one will need to be careful about entities which are under common control or have a significant relationship while dealing with those entities for non-audit services. So the firm needs to maintain independent policy to evaluate independent threats prior to accepting non-audit services, accepting audit engagement where an affiliate or network firm is providing non-audit services to the same entity. So these are the challenges which one will have to be overcome. Then yes, yeah. So when it comes to loans and advances, assessment for loans and advances to entity with negative net worth, confirmation differences were ignored. If in one case with significant amount end use of loan was not evidenced. So all these, even in case of loans and advances, these kind of a key deficiencies were found. Now, confirmation differences are ignored. Now confirmation, external confirmation is also very important area which we need to, as auditors, deal with. External confirmation processes have to be followed. In fact, as you all are aware, that Firmway is into external confirmations. So independent of anything, one could even use their platform, and that is a technological platform which could be available to anyone who is onto Firmway, use of Firmway. It could be an easier process, and not that I need to advertise anything, but since I am speaking on their platform, and since we are using that Firmway confirmation, I would also want, or I would request everybody to at least have a look at this Firmway confirmation, the ease in the manner in which you could use that, and at least answer one aspect of technology as well as one aspect of confirmation, because these confirmation differences also, way in which their platform is working, these confirmation differences also could be even thrown out, could brought to the notice of audited team. So build an ECL assessment template. So, many cases ECL assessment for loan entities with negative net worth was not done. So the suggestion is that build an ECL template, verify regulatory approvals, what is the end use wherever the end use is specified, ensure that aging analysis and recoverability assessment of advances are performed and properly documented in the audit file at the time of completion of the audit in compliance with SA 230, that is on documentation, and SQC1. So then key deficiency in case of audit documentation. In earlier side, it was specific for loans and advances. And as you know, these titles are what we saw here in this slide, summary of key NFRA observation. That is what I'm trying to take you through. Audit documentation deficiency, missing incomplete working papers, then other expenses working papers, loans and advances work paper, PP work paper, absent preparer or reviewer names and dates of preparation of reviewer. So you are expected to have your complete working papers. Many times, you find your assistant would scribble their queries. Now, and then they would say, no, we will then put it on FAIR. So as a practical suggestion, I would say that have your working papers all fair only right from the beginning, and use technology platforms whichever could be available. Or whichever you are comfortable with. The other expenses, working papers, loans and advances work paper, PPE work paper, all were not available or missing or incomplete. Then post archival modification. See, once archival is done of filing, within 60 days, you are expected to put your files in place. Now, there are cases where archival has gone beyond 60 days because a SQC1 requirement is there. And even post-archival, there have been a modification. Now, that also should not happen. And even post-archival, if in any case it has happened, then there should be a sign, even after sign-off, there any modification has happened, those also should be noted. Though there is no mandate as to that, but that should also be followed. One firm's file could not be modified after assembly. So remedial action, migrate to structure. Sorry.
No, nothing, Parisar, I guess. So, just one thing, Parisar, since we are near to the end of the session, so if we can keep the Q&A post your session for 5 to 10 minutes.
Okay. So
Yes.
I'm almost halfway. I couldn't finish everything. So how do you want me to go about it?
Okay. So, what we can understand, I'm not sure, since we had blocked calendars of the attendee up to 12 o'clock.
Right.
Maybe that would be there. So what we can do is maybe by 12 we can end up your session in terms
Right.
of your presentation, and then maybe post that we can take Q&A
Okay.
for people who would be more interested to have. There are a couple of queries which has come in the chat window, so we'll take that up. We recommend everyone to put in their queries. So maybe then we'll extend for another 10 minutes by 12:10, 12:15 for the Q&A session.
Right,
But at
fine.
least
Fair
your
enough.
presentation.
Fair enough.
Right.
So migrate to structured audit software, as we just mentioned. Mandatory templates you should have, preparer, reviewer, date. So what NFRA is insisting is that whatever you do, whatever discussion you do, please put it in writing. Please document it, minute it. So that is what has been their say. Internal documentation quality review, conduct. So time to time also you have internal documentation quality review. Apart from ECQR, which is mandatory required, you need to have this kind of internal documentation also. Related party transaction audit deficiency was found. Over reliance on management representation for arm's length, which we just discussed earlier also. Non-compliance with Regulation 18, audit file did not contain evidence for mandatory audit committee review of loans granted by company to its wholly owned foreign subsidiaries. So on and so forth, these non-compliances were noticed. Incorrect disclosure of related party transaction. So even related party transaction is one need to be really careful while doing audit, mainly as to arm's length and coverage of the related party. Do not accept management assertion alone and obtain independent data points. Obtain intercompany reconciliations you should obtain. And sometimes not only the account confirmation, balance confirmation, you should insist on even an account confirmation. So revenue audit deficiency in case of firm, no evidence of an assessment of company's SOPs and no process understanding is seen. Fraud risk assessment covered only overstatement. Understatement risk is ignored. So it is not only you should be dealing with overstatement of risk. Understatement of risk also should be dealt with. However, no specific rationale is provided. So robust revenue process understanding memo should be there, that if revenue recognition is there, requires also audit standards requires you to understand the business of the company. So, and what are the processes the company follows to recognize revenue? All this will have to be dealt with. Stratified random sampling. In one of the cases, the sampling was also not found to be properly carried out. So use stratified random sampling. Now technology is available. If you use Excel also would be able to provide you random sampling. Test both overstatement and understatement. Then ECQR sign off after audit report date, that is a violation. Then same partner acted as ECQR reviewer. This is another challenge which you need to be careful, that same partner cannot act as an EQCR, sorry. Software must block final report generation before EQCR sign off. Ensure strict separation of roles. Impairment assessment, significant exposure of loss-making subsidiary was there. Non-binding MOU accepted as evidence. Now, all these exposure to loss-making subsidiary will have to look at whether the impairment is to be carried out or not. Then whenever you have experts' opinion like valuations or for that matter actuarial valuation, then you need to look at those assumptions also. Whether in case of actuarial valuation, all the assumptions of discounting rate, the assumption of salary increase, all these assumptions will have to be looked at. Then impairment indicator checklist. So many things, your audit checklist has to be comprehensive to cover all the scenarios, all possible scenarios. Then going concern evaluation, ICFR, monitoring and root cause analysis. So most of the time, this internal control on financial reporting is found to be not tested. Then we must use this ICFR. Walkthrough testing should be done. A risk control matrix ought to be prepared. All these steps will have to be taken so as to answer these kind of deficiency do not come up. Then management recovery plans accepted without feasibility assessment of going concern. Then rigorously follow 570 framework. And in next slide, I've just drawn a chart which you should use. Root cause analysis. Identify symptoms rather than systematic root causes. Root causes analysis delayed by 3 years due to strict annual review cycles regardless of severity. So, we should be looking at root causes in a systematic manner. Conduct formal 5 root cause analysis within 90 days of significant deficiency. So that is an independent assessment altogether, and this is a framework for going concern. That slide could use as a checklist for you all. Then external confirmation, which we have discussed. Human resources, no formal staff in policy. And I must mention that, Institute also has come up with audit quality maturity model. Now to fit into AQMM also, for human resources also, there are marks. So we must ensure that the AQMM score also you attain, and therefore your human resources deficiency also should be done away with. Qualified opinion issued when adverse was required. So EQCR should see in detail such cases where qualified opinions are issued. Sometimes EOM are used to substitute qualified opinion. That should not happen. Qualified and adverse, or qualified and in modified opinion, whether the disclaimer was required or adverse opinion was required or qualified opinion was required, needs to be looked at. Other observations and recurring theme: asset retirement obligation estimate changes, useful life deviations, contradiction between group auditor and component auditor has to be resolved, and it should be documented properly. A leadership role, whistleblower committee. Now, whistleblower committee is within the organization also should be placed within the auditors. CARO 2020 also there is a deficiency observed. All these I think which we have discussed at one point of time or the other. There were other key observations: documentation, e-audit application, allow audit working papers modification after engagement partner sign off, but does not mandate the modifier sign off, but that is recommended. Impairment, which we have discussed. Independence also we have discussed. So these are earlier reports. So if you see that in most of the cases, the observations are on same lines. So these are the areas which we need to focus, and the documentation will be the paramount which we should be looking at. This is also an audit opinion. Strategic blueprint for remediation. Establish quality management committee. This is very important. Digitize the audit documentation system. Deploy centralized digital independence tracker, which we just discussed. Mandatory technical training calendar. This is very important. Training, learning and training and implementing. This is the three things which we will have to go on working on. Mandate is EQCR scheduling, and it should be completed prior to signing of your audit report. Standardize audit programs firm-wide. Extend non-audit policy to overseas network. Conduct root cause analysis within 90 days for any significant internal and external finding. Formally operationalize whistleblower committee and professional skepticism at firm level. Conclusion: audit quality is a matter of demonstrable evidence-based practice. It is not that you are doing, you ought to be doing. It is not just you see that you are doing it. That audit quality is to be an evidence by itself. The NFRA report shows deficiency cut across all firms. So it is not that only these could be found with small firms. It's found across. Independence and documentation demand structural reform. Investment in quality system. This is most important. You invest, it is not a cost, and it will have a long-term relevance. Thank you. I trust that I tried to complete whatever I could within an hour's time. We did lose 5-10 minutes initially. I thank you all for patient hearing. I thank Firmway to give me an opportunity to present some thoughts, and for me to read through this some of these inspection reports also. That was an advantage. Yeah.
Yes. No, great, sir. Paresh sir, to hear about that. So I'll definitely give my closing remarks as well, and then we'll also move to the Q&A session. But before that, just Ryan would like to run two polls for the team, so that for the people who have attended, and then we can move to the Q&A session. Post that, post our closing remarks. So over to you, Ryan.
Yes, thank you, Prashant. So we will be just running a couple of polls, just two polls, in fact. One, we would like to hear from the audience present today about whether today's session that was organized and presented by Paresh sir gave you new insights, something that maybe you all were not aware of, something that Paresh sir has also added through his own presentation. So we have made the poll live. Let us know in the polls what new insight was given up to you, whether it was an insightful session or not. I hope it was in that sense. So we would be awaiting your answers in the poll. Another more few seconds, maybe another 5 seconds, and we can move quickly to the next poll before we open up for the Q&A as well. Right. On to our next poll. So, would you be interested in exploring Firmware's audit confirmation tool? So, as Paresh sir presented throughout the presentation, where one aspect with respect to external confirmations, where he suggested, in fact, recommended using Firmware's audit confirmation tool through his own experience that is being used at the firm for the past few years, and how today Firmware has been helping more than 500 CA firms. So Bansi S. Mehta, Singh and Co., Hari Bhakti, Suresh Surana, PK Sridhar, and many more firms across India in automating their external confirmations in the compliances and requirements as per regulatory standards. So would you be interested in exploring such a solution for your firms? We would be happy to connect with the CA firms, with the participants today as well. Right. So maybe just the last 5 seconds where I leave the floor open to Prashant for the vote of thanks and onwards to the Q&A session with Paresh. Yes, over to you, Prashant.
Great. Thanks, Ryan, for the poll. So I guess we are at the end of the session, and I really like to thank you very much, sir. This was really an extremely insightful session. This is on our multiple sessions we have had in past, and I'm sure everyone who has joined us today has taken away some practical ideas that can be immediately implemented within their own audit practice, right? Because very often we do look at an inspection report after it is published. Today's session actually encourages us to do something more valuable, like if you see proactively strengthen the audit approach before an inspection even takes place, right? So the way you gave the practical examples of the arms length transaction, and how do we basically can ensure and just not rely on an MR by the management, but actually has to be also thought through and has to be discussed, and has to the professional judgment has to be applied. These, I guess, gives a lot of practical like perspective to things. And if you see the discussion around documentation, professional judgment, audit quality, has given us a clear perspective on what inspection readiness actually means, right? So I guess the best part was that every areas where there were issues, you highlighted what is that the companies can do and what are the challenges in those areas, instead of just broadly thinking that these are the 7 or 8 or 10 issues. We actually you explain them individually and what it actually has to be done. So really, sir, we thank you once again for generously
Right.
sharing your experience and practical insights. And on behalf of the entire Firmware team, I would like to thank every participant who joined us today. So we truly appreciate you taking an hour out of your busy schedules with us. And at Firmware, though we remain committed to supporting the audit profession, not only through just the technology solutions like confirmation or eco, but also creating opportunities for continuous learning and knowledge sharing. So this is, I guess, you few of us who have been there with us last few sessions we have done on multiple topics in and around finance and audit and regulations. This is just one of the many expert sessions that we intend to organize, and we sincerely hope you will continue to join us in future. And thank you everyone once again, and have a wonderful day ahead. But people who would want to have questions and would want to attend, have those answers, we'll just extend another 10 minutes of Paresa's time if he allows to. So just so that your questions would be answered, and he can share his expert opinion on that, right? So, Paresa, I'll put on to the questions one by one. So if you can just see if those would be able to answer, right?
Yeah, sure.
And if you need any further clarity. So one question which we had from Percy Rani is that the routine inspection reports published on authorities' website are also taken cognizance of by the audit committee and the board of companies for considering appointment of auditors. So if you can elaborate on the same, is what she has asked for.
No, so to put it in a different way, that I work on a board also. I am on an audit committee chair of a company. Yes, see, the board would also look at it. When the board uh, appoints an auditor, board does raise all these questions. The one of the questions these days board first ask is that how you are using the technology to complete your audit. So all these audit quality aspect, your audit quality environment, in case there is a inspection report in case of your firm, that does not mean that you would be considered as not an efficient auditor. These are the quality improvement which has been suggested, and therefore in one of the slides I did cover that. So don't consider that the observations are something which can bring you down. In fact, the observations are supporting you to improve the quality. That does not mean that there could be a challenge for you being appointed as auditor. I hope that answers your question.
Great. I guess that gives a clarity, Parisa. If they have any follow-up question, I can keep writing in the chat window. The second question they had raised is in the code of ethics, an immediate relative cannot hold a security of the auditee. However, in the Companies Act 2013, a relative can hold securities of face value not exceeding 1 lakh. So, if you can explain as to how you reconcile the two provisions.
Could you just repeat the question? Because
yes, Parisa. So, in the code of ethics, an immediate relative cannot hold a security of the auditee. And however, in the Companies Act 2013, a relative can hold securities of face value not exceeding 1 lakh rupees. So they wanted to understand how both the provisions would it be contradictory, or how it can reconcile these two provisions.
Okay, I have not independently examined this issue, but as far as the Companies Act is concerned, that limit of face value of 1 lakh is there, fair enough. But in case of a code of ethics, immediate relative cannot hold any share. I have not examined this, so I will not be able to answer. I'll just will have to do.
So maybe we'll park this query, Parisa, and if anything is there, maybe they can come back to you post that, right?
Yeah.
And another query, I guess, by Percy was that how the confirmation process through firm may be safeguarded from client confidentiality requirement. So,
Prashant, you are the best person to answer.
Sure, sir. Sure, sir. So basically, if you see from that perspective, so right now we do a back-to-back agreement with the audit firm, wherein whatever terms you agree with your clients, right, as an engagement letter, as a confidentiality agreement, we do that same terms with you, that this data is the ownership resides with the client, and we cannot use the data for any purpose other than serving the client. So those confidentiality, and this remains as a tool, multiple tools which you use today for multiple services. This is purely as a tool wherein we share in the entire SOC 2 type 2 audit reports, ISO 27001 certifications, and multiple security and other things to give you a comfort that the data which you are sharing with us, or you are using the tool for, is in the safe hands and is meeting your regulatory requirements also, right? So that is where this is basically would be, I guess, would have been answered to that. Hopefully that question is answer is served.
Prasad, then trust that this is examined from DPDP Act perspective as.
Yes. Yes, with the recent DPDP Act, we are also being compliant to that as well. Another question by Sabrish is, what are the non-audit services removed under Section 144? So we do have that understanding, Paresh sir?
No, there is not any non-audit services have been removed from 144. From the day 144 has come, non-audit services as specified under 144 are continuing as they are. The interpretation was as to the tax representation, etc., which is permitted, considered as permitted.
Got it, Professor. Another query by Rucha Joshi is, we were the statutory auditors of the listed company. We resigned after March 2026 AGM, right? The company is in total deadlock. Please suggest documentation as an auditor we need to have in respect of NFRA.
No, I mean, sorry. Can you repeat the question, because the sequence is
Sure.
not.
Sure, sir. Sure. So basically, they are saying that they are the statutory auditors of a listed company and they had
Right.
resigned after March 2026 AGM,
Hmm.
right? So the company is in
They have
total.
already resigned. I mean, AGM is over of that company. That means.
Right, right. ACM they have written. I guess it would be AGM only that way. So the company is in total deadlock. They are saying, please suggest documentation as an auditor we need to have in respect of NFRA.
See, I mean, if we look at NAFRA's requirement, we should have, I mean, you should have done it more or less everything simultaneously to maintain your documentation. Now, if there is a deadlock, your working papers on an ongoing basis, if maintained, then these deadlocks should not come in your way. That would be my view. Otherwise, it will become a challenge per se. But at least you must document the reason for your resigning to be on record. But if you have signed the financial for 26, then the documentation for those financials will have to be completed. Even from
So,
NAP perspective.
understood. It's ACM only. They mentioned. It's not AGM. ACM only. ACM.
Okay, ACM, but that is before signing or after signing? If before signing, then you have the reason why you have resigned, and while up to that date, you could have ideally completed your working papers.
Okay, so it's actually after signing. They mentioned.
Okay, after signing, then you have that 60 days. I think you don't have any go of not completing. You can't get any exemption therefore.
Got it. Oh, got it. So I guess we'll move to the next question. I guess it's with by Yash. If during the archival process I forgot to include a document, would that be considered a modification? If yes, in such a case, do I need to create a document explaining the reason for that change?
Yes, yes, because any modification in archival, though there is no mandatory of sign off as I mentioned, but your reasons for change you will have to document. That would only support you that why that modification was carried out, and then you can do another modification sign off that would enable you to satisfy the requirement as well.
Perfect. Paresh sir. Another query by Sanjay Rane, whether circulars guidelines, etc., are issued by NFRA from time to time are also equally applicable to non-listed companies?
Uh, Answer is no. But the idea is the quality improvement, and that quality improvement needs to percolate down, because the company which is not NAFRA entity today would become a NAFRA entity tomorrow. Then where do you stand? All of a sudden it becomes a NAFRA entity. I think, see, audit quality, whether NAFRA circular, I mean, certain circulars may not be applicable, but one related to SA 600, etc., SA 600 per se you have to apply even for non-listed entity. So if, as and when SA 600 comes into play, the revised one, then you will have to adhere to it.
Okay, okay. Got it. Got it. So I guess in line to that question, what is also asked is like, can NAFRA go back to the previous financial years for its inspection in situations where the auditors currently do not hold the position as such of that company?
Yes, yes, NAFRA can.
Okay, okay, got it. And I guess another question by Dipali is, for going concern assessment made by management, what kind of document can we keep? Some companies do not have a formal documented assessment of going concern by management.
I mean, the slide which I gave, which gives you full idea what documentation you will have to maintain. Because if there is an support available from the management, then you will have to corroborate with proper evidence that that support would come by. And it would not be a mere letter that okay, we will support. You will have to see if the one who is supporting only does not have proper funds, then you can't take a document for the sake of it.
Got it, got it. I guess this gives a clarity. Another query by Vrushti is, in light of NAFRA's observation regarding the use of term immediate relative instead of relative in the independence declaration, please clarify whether independence with respect to relatives is required to be evaluated for all partners of the firm or only for the engagement partner. For other partners, would it be acceptable to restrict the declaration to immediate relatives?
As we read NAFRA's observation, no, it cannot be restricted to immediate relative.
Okay, got it. And another, so Parisar, we can take a few more queries, or how do you suggest?
No, whatever you decide.
Okay, okay, got it. So another 5 queries are there, so
Hmm.
maybe we can take that up.
Yeah.
Thanks, sir, for your patience. So another is by Mervin. So what about the network firms for the services rendered that possibly is out of scope for the Indian jurisdiction, and permissible non-audit services are allowed? So NAFRA seems to be going overboard. So they had, I guess,
On this
that
platform,
kind
I
of.
would not like to comment on this aspect.
Perfect, sir. And another question by Ambesh Dave is whether ex-partner in the capacity as director can visit client, finalize audit, and then conduct EQCR.
No, if ex-partner is was engaged at that any point of time as the engagement partner when he was in position, then he doing ECQR, if he has completed those 7 years, then there could be some challenge under SQC1 also for him to doing ECQR.
Okay,
But
okay,
that's a gray area.
okay, okay. I get another question from Mr. Murli is, to which completed financial years the NAFRA picks up for inspection?
No, I mean, in 26, what report came was financial year 23-24.
Okay.
That is what the information is.
Okay. So, understood. And another question by the same person is, if a CA firm rectifies its deficiencies by reading the published inspection report, and if NAFRA conducts an inspection for prior year, will NAFRA still publish the inspection report on deficiencies?
Yes, I think if you see NAFRA's report also, in NAFRA's analysis, suppose if they've done something in 23-24, you as a firm improved that deficiency in 24-25, NAFRA does mention that okay, this process is resolved, or the firm is in process of doing it. If you read those reports, it is clearly saying so also. And again, I repeat that NAFRA's inspection report, don't take it as something negative. It is to, I think, enable the audit fraternity to improve the quality to best extent.
No, that gives clarity. I guess how we should think about it more from that side. Last question, I guess, from Dhruv Kothari is, what is the update and your take on NAFRA versus ICAI for SA 600 on the legal liability and accountability of group principal auditors when relying on the work of component, that is subsidiary auditors?
As you know, NAFRA came up a circular September 24 on application of SSA on the lines of application of SSA. The institute also came up with, NAFRA came up with draft S6 of international auditing. Institute also gave their draft. They were before MCA. I understand that Institute also has made certain amendments to the exposure draft of SS 600 which they had. So now is before MCA, I believe, but the second part I am not too sure about the facts, but this is what my understanding has been.
Perfect, perfect. So I guess this is it, sir. And I really thank you for sharing your perspective towards this, and thank you for taking your time out. And I really thank all the audience who have been there with us for this period.
Yeah, thank you. Thank you, Prasad. Thank you, Formway. Yeah.
Yes, sir.
Thank you for this.
Thank you.